which was CoinDesk. This is actually very interesting. It's very short, but Goldman Sachs is looking to spend tens of millions of dollars on crypto firms whose valuations have been hit after the implosion at FTX officials. So this is an interesting article. It's a little bit of a double-edged sword, but we're going to get into it. So Goldman Sachs to spend tens of millions on discounted crypto investments after FTX implosion report. The investment bank sees a bigger need for trustworthy and established players in the crypto market. Goldman Sachs is one of the largest investment banks. Is looking for tens of millions of dollars on crypto firms whose valuations have been hit after the implosion of FTX, Reuters reported on Tuesday. Crypto exchange FTX filed for Chapter 11 bankruptcy on November 11th following troubling revelations about its financial conditions and the relationship with trading firm Alameda Research. The FTX fiasco was one of the latest blow to an industry that has seen several high-profile bankruptcies in the past few months amid a depressed market. The contagion has affected such firms as crypto lender BlockFi, which also filed bankruptcy last month. We see some really interesting opportunities priced much more sensibly. Matthew McDermott, Goldman Sachs head of digital assets, told Reuters, Goldman sees an increased need for trustworthy players in the industry, which the bank sees as an opportunity, he said. Goldman Sachs didn't respond immediately for a request to comment. So this is actually an interesting article. There's a lot to unpack here. It's a little bit of a double-edged sword because on the one hand, there's I keep on covering all these crypto companies that are potentially going to go under. So that those cryptocurrency companies going under could lead to that 11K in price. So we have Coinbase, they're refusing audits. Digital Currency Group has Genesis, which is in like a 100 million, I don't know exactly, maybe $100 million hole, because they used they lent money to FTX, which is now insolvent. So that's Digital Currency Group. Then you have Grayscale's refusing audits. Coinbase is refusing audits. KuCoin, people are saying, is insolvent. I know there are big companies saying, there are big Twitter accounts, that have growing suspicion about KuCoin going insolvent. Then you have obviously BlockFi filed for Chapter 11. Voyager filed for Chapter 11. Celsius filed for Chapter 11. Many of these bankruptcies and insolvencies have been priced in, but many of them haven't. And I think people are all looking for the next one to go under. So if Goldman Sachs comes in and buys them out and provides liquidity and things like that, then that could prevent that from happening and really cement the bottom of the crypto market, making this the capitulation and no further downside. So that is good in terms of like market price performance and things like that. Right. So like if they buy up these companies, that would be extremely, extremely bullish for crypto because they have a lot of liquidity. They could really save many of these exchanges and institutions from being insolvent, which would lead to cascade liquidations to pay back creditors and depositors and things like that. So I guess that would be the good part, but the bad part is pretty much the obvious, which is that crypto is supposed to be about criticism of big banks and Federal Reserve monetary policy. It's supposed to be about self-sovereignty, decentralization. That's really the principles espoused of the cryptocurrency industry. And Goldman Sachs, acting as the JP Morgan that everyone thought that Sam Bankman-Fried was, and coming in and buying out all of these failing institutions and providing that floor would lead to a serious consolidation by these major banks and a stranglehold on crypto. So that is the double-edged sword. Is it better we just get all these institutions out and have some more downside, or suffer the consequences of selling out on the ethos of cryptocurrency? That's really the question. And I would say personally, I believe that it's better to have cryptocurrency, it's better to have cryptocurrency stand for what it was originally intended for and used for what it was originally intended for, which is self sovereignty, which is holding your own keys, which is, criticism of Federal Reserve policy and searching for a more sound currency, a more sound form of money. So I would say it is overall not good, but I guess you could say it is good in the sense that it pumps your bags. Goldman Sachs is pumping your bags in that sort of sense. What does that mean for Hex? I don't know. Hex kind of, the price performance of everything is really in tandem. So I think good price performance from Bitcoin and Ethereum because of Goldman Sachs providing that floor and buying out all these institutions, that really, that's bullish for Hex, but I don't know, how do these big banks leverage their market, their bigger piece of the pie, maybe to marginalize cryptos that stand for the original principles espoused by Satoshi Nakamoto of self sovereignty and having your own keys and removing middlemen. I mean, how do they act towards that? That's a big question. But I think what happens and doesn't happen is regardless of what I believe and what you believe. So that's why we're here to cover it. Next up is our main story, but I just want to quick bathroom break. Please hit the like and subscribe if you're enjoying the video. Please send a super chat. I'm monetized now. You could send super chats, or you could send money to the wallet, the ETH address, the ETH wallet in the description below. Or if you don't want to send any money, put your email in the list in the description below. Click the link to the email list, put your email in, end-to-end encrypted, no spam, it's private, nobody else sees it. But if you don't want to do that, hit the like button, hit the subscribe button, and I just appreciate you watching in any case. Be right back. Fufu Finance will be right back after these messages.